Let's get out of the currency markets. Joe Trevisani is chief market strategist at WorldWideMarkets. Joe, welcome. Are you surprised by what the yen has done?
No, not particularly. I mean, if you look over the past 6 months, the central banks have had a great run on jawboning the markets. They've done a very good job. The ECB did it with the bonds, and now the yen, the central bank in Japan and the government has done it very well. So I'm not really surprised.
You know, when we look at the yen, we kind of ignored it for a number of years. Is the yen now suddenly become the most important currency in the world?
Well, without being facetious, to the Japanese it absolutely is. Because if they don't get the yen to a level that will support and let their exporters get some sort of traction.
Yeah, but how about, Joe, to us? Because every trader that we've talked to, every guest we've had on the show, right, Mike's articles, whatever, I mean, they say, oh, the yen, and they're talking about U.S. corporate earnings.
I don't think it's all that important to the U.S. I mean, the U.S. economy is not that export-dominated the way the Japanese is. So for the Japanese to get traction, they definitely need to move that yen, and they understand that. Whether that is going to increase and benefit their entire economy is another question entirely. But it's a place they have to start, so they know they're going to do that. Right now, the problem I think they're having is, one, the dollar looks set to get quite a bit stronger for reasons which have nothing to do with Japan. And the Japanese are going to have to prove their own determination to move the yen. So far, they've only talked. The market's responded. We all know that works. Sooner or later, and I think sooner, they're going to have to come in and do something to make sure that the markets understand that they believe this, and they're going to back it up. And they've not had a good record with that.
It's just sitting below 98, the dollar-yen levels. What are we looking at in terms of where it can go from here in the short term?
Well, in the short term, I think we're just going below 100 and then back to 95. I don't think you're going to get a lot of movement right now, unless, of course, the dollar strengthens substantially. That's the best ally the Japanese have right now, is the Fed. Mm-hmm. Because the Fed the Fed also hasn't done anything yet. Right? They're just talking. But when they do move, and I think they will, then they have a good ally. But I think they'd like it around 105, between 105 and 110. I don't know if they'll get it there. It'll be very tough to get it there just on Japanese intervention and talking themselves. They need help.
Do you think that the BOJ meeting on July 11th, they increased purchases of ETFs? Because that's one thing that's interesting in Japan. Right. The central bank's actually in the stock market, right, as well as the bond market. And if they do that, is that enough maybe to give the world a little bit of a deep breath?
A little bit, I think. I mean, we would look at them and expect them, at least in the currency markets, to come in the currency markets. But we all know that's not had a good history in Japan. It's difficult for a central bank, once they get down to the market, making them prove that they're going to do something rather than this talking, that they need help from other central banks. So I think they will take sort of the cue from the Fed that they're going to look into other areas, as you say, to convince the market to what they really want.
I'm going to apologize in advance to everybody for a little bit of home bias here, but I really want to talk about the Australian dollar, and not just because I'm Australian, but I think it's really interesting as a proxy for what commodities are.
It's also going to be a great wallpaper soon.
I know, or toilet paper even.
That's now.
So it's sitting, I think, at 91 cents, a 33-month low. Wow. How much lower does it go before it becomes a screaming buy?
Well, you could go down to 85 to the 80. I mean, look, if you look at the historical rates of the Aussie, you're not anywhere out of the ordinary. It's what was out of the ordinary, what was extraordinary was its huge rise. Not
China shifted
now.
Seismically up into a new category,
absolutely,
right?
Absolutely. But it was there because it's a commodity exporter.
Yeah, right.
No, but just look at the good thing. If you have a mortgage in Australian dollars but get paid in U.S. dollars.
In theory, right?
Theoretically, if you have a mortgage in Sydney and you're paid in U.S. dollars, you are banking it.
Right.
Do you know anyone like that?
You still have a place?
I still have a place in Sydney, and of course I have a hefty mortgage as well. So I'm pleased. Every ticket goes down.
You should be talking down the Aussie dollar instead of paying me to talk it down for you.
No, Australia, I think you have to be very careful about, because if China's comfortable with the transitioning to a slower growth, and Australia's terms of trade got to a century high. Best terms of trade they ever had in 100 years, and that allowed the central bank to be comfortable with an Australian dollar over parity to the U.S. dollar. That's disappearing. And so Australia might get comfortable, to your point, Joseph, on the old regime, where fair value for Aussie dollar is closer to 60 or 70 cents to the dollar.
We're going to go in a second. What about the rupee? I know. Does anyone care about the rupee?
Well, the rupee, yes, because this is our EM problem, right? You have countries with big current account deficits, inflation still higher than they'd like, and small liquidity windows. India, Brazil, South Africa, Turkey. These are the EM countries you want to stay away from right now. I don't think we're done with that.
They're all frantically, all these various central banks, Russia, Brazil, etc., they're frantically trying to support their currencies from this incredible volatility at the moment. Is this going to really complicate their ability to also maneuver over on rates.
Well, and
with
the
slowing
market's
economies?
starting to price in that they're going to raise rates, have to raise rates to protect their currency. If they're raising rates, what does that do to growth
Raise the
expectations
economy.
and earnings
Hey,
expectations?
Brazil's the country of the future, right? Always has been, always will be.
Exactly.
The ones they say.
Order of progress, isn't their
Did
motto?
you see the story to this morning? Front page of the New York Times about Ike Batista and how much money he's lost?
He's how much has it been? 7 billion?
More.
More than 7 billion?
I believe so.
Ike Batista, by the way, for our viewers or listeners, was the richest man in Brazil. He still may be.
From the peak, Mr. Batista had $34.5 billion. How much does he have today?
Less than that?
$4.8 billion.
But you know what? To your
What?
Yep.
Wait, he went from 35 billion to 4 billion.
To 5. Yeah. 35 to 5.
That's a big
How's he
loss.
eating?
But to your point on Brazil,
With a B.
you know what? I think this is a good reminder why active management actually can work. You look at a market like Brazil, the stock market, the Bovespa, has just fallen off a cliff. But then look at certain airline companies in Brazil. The stocks are up huge over the last 12 months because they're global. They're based in Brazil, but they have nothing to do with Brazil. So there are opportunities out there.
That's an excellent point.
Okay.
Thanks, everybody. Joe, thank you, by the way.
My pleasure.